Good morning, everyone. Welcome to Monday. Welcome to Monday Minutes. We continue to, like most people out there, we continue to hope and pray for the best of outcomes here in the Middle East. Practically, as we wrote this past Friday to our clients, we're watching the U.S. dollar, we're watching oil, obviously less so, but certainly this morning, a little bit of an alleviation trade. U.S. rates to a certain extent, but the environment within this pocket of time in terms of flight to quality versus geopolitical is clearly a little bit different. This week on the ground, we'll get a lot of housing data. Retail sales will be important. We have just about every Fed speaker that we could possibly have this week. But most importantly, I would say at the Economic Club on Thursday, we do get Chair Powell. Look, the Fed is sending a clear signal to the message here. Some market participants are saying that markets are doing the Fed's job. We spend a lot of time in the weeds, obviously on the short end of the yield curve, but also out the curve, looking at real yields, in particular, looking at 10-year real yields over time, which have certainly repriced. And there have been a number of good speeches out there recently. Dallas Fed President Lori Logan, very concise and thoughtful piece looking at different scenarios, talking about term premium. So, we live in a world now where we're talking more about term premium. We're talking, and the Fed is openly talking about the potential for a higher neutral rate. And because of some of the aspects of the supply side of the economy, the tightening that we've seen to date, traditionally, in our view, hasn't really kicked in as quick as one would hope, probably not as quick as the Fed would hope. And those dynamics we think are going to take some time to play out. The message from the Fed, though, is very clear. And we're not too sure the market is doing the Fed's work. Look, we've got dynamics globally, whether it's foreign central bank buying. The economic data has been stronger than expected. We've got a ton. We've got wartime spending coming out of Washington, the fiscal deficits that we're running, the amount of supply that needs to be taken down. If you look at the stars that have lined up, they have all lined up for higher long end rates. So a lot of what's going on is actually out of the Fed's control, but nonetheless, they have taken note of this and are writing very explicitly about some of this long end, the rise in long end yields that we've seen throughout the course of this summer, taking the place of tightening, which from our perspective makes sense. We think it's probably less so about the short end now, more so about the longer end in the curve, and more specifically about real interest rates. So on the ground this week, we will hear from Chair Powell and a bunch of other Fed speakers. We do think the message will be clear as we get closer to the blackout period that the Fed is at a minimal on hold here short term, probably providing some leadership amidst very uncertain times. We don't know how the events abroad in the Middle East will develop. Right now, some stability, at least on the short end, although we're not really getting that on the long end, would be a welcome sign. We do expect to continue to hear that message. And there's a very high probability that the Fed could be done for all of 2023 and perhaps the cycle. But it's probably too early to declare that victory. We're going to need to see how inflation moves in the months ahead. When we see pockets of time like this on the geopolitical side, bigger picture, it always forces a thought process to what this means with regard to supply shocks going forward, the uncertainty of the world that we now live in, and how that will impact central bank policy, bigger picture. Wishing everyone a great and safe week ahead. I'm Greg Faranello. I'm head of U.S. rates for AmeriVet Securities.